So in the next sum, it's like quite complicated thing because we buy several machines and we also sell several machines. So it's a little bit complicated, but still we have to understand it. A second-hand machine was purchased on 1/1, we'll take it as 2010, for 36,000 and installed at a cost of 4,000. So the machine worth is 40,000. Okay. On 1st July 2001, okay, in the next year, they have bought another machine for 26,000. So there are now two machines and two depreciations. On 1st July 2002, the first machine which is bought was sold for 30,000. So two machines were there and then one machine has been sold. On the same day, one more machine was bought. So on the same day, they have buying another machine. So you have to provide three depreciations here. Okay, don't worry, we will be like seeing step by step. On 31/12/2002, the machine bought on 1st July, that is the second machine, has been sold for 23,000. Accounts are closed on 31st December. Thank God they are closed on December, because if it's closed in March, we will be like having a little bit higher headache. Depreciation is written off at 15% per annum. Okay, so that's about the concept here. We will set up the table and then we can start. Okay, so we'll start. We'll use this table again. So to find out the machine cost, so the machine cost is, installation is 4,000 and the machine cost is 36,000. So totally 40,000 is the machine worth. So bank, we'll put it as M1. Okay, machine 1 will show it as M1. So bank has purchased a machine. Sorry, we have purchased a machine by paying cash. The date is 11x0. Okay, so we have purchased and we have to show the depreciation. The account is closed on 31st December. Have we purchased any other machine on that year? No. Okay, so we can simply put the depreciation. So the date would be 31/12x0 or 2010. What would be the depreciation? The depreciation will be a full year depreciation, but we'll still calculate it. So it's going to be 40,000 into, percentage is 15%. We got it. So that it should be 6,000, but still we will use Excel. Okay. On the same date, we can show the balance brought forward. So brought forward is 34,000. Done. So this year the account is closed. So I think we'll first close the accounts. Okay, usually there's nothing colorful in accounts. At least the line could be in some good color. So I think we'll remove this sentence. Okay, so that it's like compact, we'll keep it. What we did there, okay, we left some space. We don't need to leave some space here. The reason is like this sum is a little bit lengthy, so we'll keep it as compact. So we'll start. So now our date would be x1. Okay, and the sorry, it is carried forward, not brought forward. Okay, so we have a brought forward of 36,000, sorry, 34,000. Done. So this is on first 1/1/2011. On 1st July, okay, on 1st July 2011, there is going to be another purchase. So another purchase, it's going to be machine 2. So now we have to provide, sorry, the value of that machine is 26,000. Okay, so total value is 60,000 has come. We have to provide depreciation. So we have come to 1 year. Okay, by depreciation. See, by depreciation, we will put as two things. Okay, we'll put two things, hyphen. We'll put it as M1. Okay, because there are many depreciations would be now available. So again, M1. Okay, see, now there are like two depreciations. One for the full machine. Okay, machine 1 has to be provided depreciation of the full year. So this is like correct. The machine 2 has to be again provided depreciation. So we'll copy this. So we'll push it by again one line. Okay, so we'll copy this and we'll use it. So now the machine depreciation is for which machine? For the machine 2. Machine 2. And what's the amount? Amount is 26,000 and depreciation is 15%. How many months? It's on July. So July, August, September, October, November, December. It's 6 months. So it is 6/12. We got the amount. Let's put it. Let's get it. We got it. Okay. So this is the depreciation. So the total amount that we have, okay, the total asset value is 60,000 minus the depreciation fully provided is 7950. The balance is the carrying value. Okay. So we can simply take this line and we can close the accounts. Okay, that's closed. And now we'll open the accounts for the next year. Okay, we'll open the accounts for next year. So when we open the accounts, it's going to be 1/1/12 and the amount is 52,050. Done. Now what are they saying? On 1st July 2002, okay, the first machine was sold for 30,000. So they are selling a machine. On the same day, they are purchasing one more machine for 20,000. Okay, 25,000. So first, let's purchase it. Okay, let's do the good thing. We are purchasing. So when we are purchasing on 1st July 2002, we are purchasing machine number 3. How much is its worth? Its worth is 25,000. Done. And now we have to provide depreciations. Okay, not depreciation, depreciations, because there are so many depreciations here. So we'll start. First, we'll provide depreciation on the machine which has been sold. Okay, so as we are selling a machine, we have to provide depreciation on that date itself. Okay, we have to provide a depreciation on that date. So this and all we can do later. So this we can do later. First, we'll do this part of it. So we are selling a machine and how much ever we are using till that point of time, we have to provide depreciation. So how much we are using is, we are using for 6 months, 6 by 12, and for that we have to provide depreciation for machine 1. So that comes to 2000, okay, sorry, 3000. On the same date, as we are selling, we are putting bank. So bank is for machine 1 has come. So how much we are selling it for? Was sold for 30,000. Okay, we are selling it for 30,000. Okay, so first we have to adjust till here. We have to find out whether there's any profit or loss. Okay, first that we have to find. So for that we have to do a working note, or else we can't find it. So working note is cost of machine, okay, total depreciation, okay, carrying value, okay, sale value, okay, we will get the profit or loss. So this is for M1, because there's also another sale of M2 that we have to show later. So we'll start. See, M1 machines, okay, so we can, so M1 machine was bought at 40,000, right? Done. What's the total depreciation? See, that's why we mark this as M1 depreciation. Okay, we have 6,000, we have another 6,000, we have another 3,000. So total that comes to 15,000. Okay, so the total depreciation is 15,000. That's why we have marked that as M1, so that we'll get some idea. So the asset value minus the depreciation value gives you the carrying value. This is the current worth of the machine. This machine was sold for how much? 30,000. So 25,000 worth of machine was sold for 30,000. So is it a profit? Yes, it's a profit on sale of M1. Okay, so we can simply copy this. If it's a loss, it will come on this side. If it's a profit, it will come on this side. So we'll put it here. So profit is this much, and date is this. So whenever you make sale, you have to provide depreciation on it. The bank amount will come and the profit or loss account will come. So 8 entries will come. So 3 entries have come. So that's about the concept here. What else we still have is the depreciation that we have to provide for. We leave one line space just for clarity purpose for machine 2. So machine 2 is like used for full year. Okay, so but let's wait. See, there seems to be some other additional movement on 31st 12. Okay, the machine bought on 1st July 2001, that is the M2, was sold for 23,000. Okay, so that is like sold for 23,000. So the machine 2 is sold, but whether you sell or not, you have to provide. Okay, so depreciation we have to provide, and it is like used for full year. Thereafter, we are as we are selling, so we leave some more space. Okay, as we are selling, we have to put it again by bank. So this time we are selling machine number 2, and we are selling it for how much? We are selling it for 23,000. So done. So machine 1 has been shown here, machine 2 is being shown here. So let's work out whether there's a profit or loss on machine 2, right? So we'll copy the same. Okay, or else you can also show like this. You can show directly like M2. So let's see what happens with M2. M2 was purchased at what cost? At 26,000. It is sold for how much? 23,000. What is the depreciation till now? Depreciation is 1950. Okay, and again, okay, why it is showing again 1950? Okay, we have not copied this cell, so let's put it here. And 3,900. So only 2 years, 1.5 years it's there. So the total depreciation is 5850. 5850, and let's get the value. So the asset worth is only 20,150. It is sold for 23,000. So the difference we have to show. So the difference is actually a profit. Okay, it's a profit. So it is sale value minus carrying value. So it is a profit. Okay, so profit on sale of M2. So we'll take that profit and we'll put it on here. Okay, and we'll put the date also. So this is the sale date. Done. So we have sold the second machine and its profit. Depreciation has been provided. The bank sale value has been taken, and the profit or loss also has been accounted. So is the sum over? The answer is no, because there is one machine which we have bought, that is called as machine 3, on 1st July 2012 we have bought. So we have to provide depreciation for that. So we'll take that. So we have to provide depreciation for machine 3, and how much would that come to? See, that comes to 25,000 is the machine value. Okay, so that comes to 3,750. So what is the total machine balance value? So we'll try. It's like very easy. Okay, so the total comes here to 82,050. So the difference between these numbers, 82,050 and the total of this side, 63,650, is the answer. So 18,400 is the answer. So that is the balancing value of the machine, or the balance machine worth. So with this, the sum is over. But is it correct? Okay, is it like what we have done, is it correct or not? So that is the question. Okay, so I think years we have not adjusted. We will just take the years properly. Okay, so years I think we have accounted properly. So that's it about the answer. So is it like correct? So let's find out M3. Okay, so this is not required as part of the sum. Just for our verification, we'll just try. What is the cost of the machine, of the third machine? It was 25,000. What was the depreciation that we provided on that machine? It was 3,750. Okay, it was 3,750. So do we have, okay, Okay, so do we have okay, I think we have provided for a full year. Sorry, that we should not be like providing for full year. We should have provided for 6 months only. Okay, it's 1875. So this value minus 61775. Okay, so 1875 is the worth of the machine. So what is its carrying value? So carrying value is 23,125. See, machine 1 has been sold, machine 2 has been sold. Okay, profit has been accounted. So 1 and 2 is not at all in our books. The only thing that is still remaining is this value. So the only thing which is still remaining in our books is this value. Okay, this one, and the depreciation on that machine. So okay, the depreciation on that machine. Let's check why. So when you deduct both, okay, deduct both of it, that has to be the worth. Okay, why it is not coming? Let's check. Okay, I think one number we have missed, that's why it's not coming. It's 84,900. Okay, the total is 84,900. So this value, okay, yeah, now we'll get it. This value minus 61,775 will give you 23,125. If it is there, it's what we have done is correct. It's there. Okay, so how did we correctly get it? Because the only thing which is remaining now is M3 and the depreciation on it. Okay, so the value that is left with us would be only 23,125. So even when you work out the machine cost minus depreciation, this is the ending value. This is the only machine that we are still having. Okay, M1 M2 is sold and profit is accounted. So 23,125 is the value of the third machine that we are still holding. Okay, so this is a nice sum. Once you get an idea of about this, you can work out in multiple machines you have, still you can work out and still get a answer for it. Okay, so we'll move on to the next sum.